Hey everyone, Dan here. We are during Power Hour on Wednesday, May 5th, and wanted to take a look at CCIV, which is the SPAC that's bringing Lucid Motors public. Before we get into it, I know that the market is having a rough cycle that is often sort of initiated by some bad comments or perceived bad news that's driving things very, very red very, very quickly. And I just wanted to mention sometime around this time frame in the video, I will link up at the top a video that I did a while back called What to Trade When the Stock Market is Crashing. And that's not to say that the stock market is actually crashing, but just when something happens that drives the overall markets relatively red, and especially is punishing to tech and growth stocks that had seen some good momentum coming out of 2020, for folks that are getting hit really hard with those things, that video will give you some strategies that are available to anyone who trades just regular stocks, regular ticker symbols. You don't have to worry about me talking about short selling or me talking about profiting by options trading strategies. This is just for folks who want the simplicity of trading stocks and not having to deviate too far from kind of what they're used to. That video will help you stay profitable, or at least kind of mitigate the loss potential that you see on these very, very through and through red days within the market itself. So I just wanted to say that for anyone who's having a rough time, watch that video. It should help. It should give you 5 stocks that you can trade that go up when the market is going down. And hopefully that helps. And in the future, I'll put more out about some option strategies for folks who are looking to get into options that, there's definitely a lot of opportunity there to profit as well when the market is going down. Okay, I just wanted to mention that, and then I will also mention that if you enjoy these videos, please hit the like and subscribe button. It helps a lot, and let's get into it. So setting aside the bad news cycle and the overall market sell-off that's happening, let's take a look at CCIV's chart and just kind of see where that stands in and of itself to whatever effect or whatever impact that may have on its future potential. First, we're going to look at the macro chart, which is the 2-hour chart that spans about 3 months. And then we'll take a look at the micro chart, which is 5-day, 5-hour chart. 5-day, 5-minute chart. So on the macro chart, just to either give you some really broad context as to where CCIV is overall, or if you're doing investment trading, longer term swing trades, this is potentially a time frame that you could look at. So obviously CCIV fell off this cliff pretty catastrophically way back in February. And so we'll set that aside for now because that's such an out of reach area at this point. What I would focus on is this, I wouldn't call this a down channel so much as I would call it, in the broader context of everything, a consolidation channel, because it's moving relatively sideways, but it's definitely sideways and slightly down. So it's kind of the sad of all sad. The one thing that I also notice here though is, you see this 2507 level. There's all this topping out here, 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 and here. So we take the peaks out of it, which is the areas where it attempted to break out of this sideways channel and this consolidation channel. The other peaks that lie within the channel itself do come up to that 2507 level. And so one thing to look at is that will be the most important immediate area for CCIV to get support. The other, or I guess one of the other scenarios that could play out is it stays even longer in this consolidation channel, which I know folks don't want to hear, but it's certainly possible. Yet, because that 2507 level seems to have some consistent testability for the upward price action of the stock, that will eventually push CCIV out of this consolidation channel just by way of it getting closer and closer to the top of the channel, which you can see as time goes on. There's this much distance between that level and the top of the channel, and now there's just this much distance. So that distance will continue to recede and become smaller, and eventually it will just push itself out. But that would be a very long, painful, frankly boring process for it to just kind of stay in this channel, every once in a while touch 25 and then work itself out. And that also wouldn't necessarily like set it up for anything really promising, short of some like incredible news catalyst pushing Lucid at that point higher. But if you are looking for some bullish hope, that's what I would look for. The other level that you might want to catch before then would be like right about here, this 2091, which is representative of all of this previous resistance, then all of this previous support, and all of this previous support. So those are really, really important zones in my opinion. These two I would be looking for as sort of like, I'm just gonna put them in yellow, not because they're cautionary zones. I don't think we need like a stop loss kind of zone on CCIV at this point. It's kind of like if you are tired of your capital being tied up in this one, or you're just sort of like need to step away and then come back to it fresh. I think that is probably sort of like a psychological stop loss that's happening at this point versus literally hitting a price zone and saying, okay, I'm stopped out. So, but those two levels I would say are incredibly important if there's hope of getting out of this channel. And then the next level, and this is going to depend on like where the price is when it approaches it, but the next most important level is going to be getting out of the top of this slightly down channel, this consolidation channel. So those are the levels that I look for. So let's just say like 21, support at 21, support at 25, not resistance, support at 25, and then something like support around 30 if it approaches that anytime in the near future. If it's down the line, then it'll probably be like 28, 27 even. But that's what I would look for the time being. But there's no other like channels forming. There's not even like uptrending that's pretending to happen. So this is just as basic as this seems. This is the be all end all as far as the price targets go at this point, in my opinion. So let's pop that off the chart. So just screenshot it here if this is helpful to you, or you can just back the video up. And let's take a look at the indicators. Let's take a look at the MAs, first of all. So they're bunching up here, which obviously they have been for a while, which is what you would anticipate in a consolidation period. So what I always say, and if you've been watching my videos recently, you've heard me say this a bunch of times, but just just for the heck of it, let's say it again. As these MAs bunch up, what we're going to be looking for is for them to unwind, so them to start getting distance between one another. And as they start to get distance between one another, what you're going to look for is which way are they breaking. So for instance, you'll see like here, they were bunched up really tight, right? Except for the red, but the 180. But these were all bunched up really tight. And then when they started to break and get distance from each other, they were all getting distance from each other in an upward fashion, an upward direction. And so that would be a really good buy signal. Conversely, and this isn't the best example because only two of these are coiled up because this happened so quickly, this sell-off. But the 12 and the 20 started to bunch up together, and then when they broke and started getting distance, it was all in a bearish direction, and so that could have been a good signal to sell out, protect any profit you might have made, or cut your losses, whatever it may have been. But I would be looking for something similar to happen if and when CCIV ever decides to make a big move again in the near future. Do things unwind in a bearish pattern, or do they unwind in a bullish pattern? As you can see, it's coming off of this very, very short bullish push. And so right now everything is turning bearish. But again, the overall market itself is having a really, really rough day today, especially hour. So let's get those off the screen. RSI, as you would imagine, is very, very low. The disappointing thing here is, it spends so much time in this oversold territory and it just doesn't seem to do very much. Like it's oversold here, and the price is like 20 bucks. And then it just makes itself out of oversold and then comes right back down to oversold, and then the price is 1950. So there's sort of, while it's in this consolidation slash down channel, there's not, in my opinion, a great reason to use the RSI for buy and sell signals. It's just spending too much time in the overbought, and then when it does leave it doesn't necessarily seem to mean anything like it does with like AMD, for example. We see that consistently run from oversold to overbought, and it's a really consistent way to play. On the MACD, surprisingly, there is a slight bullish crossover here. I mean, that's probably still sort of an offshoot of this slight upward push that we saw. Since this is a 2-hour chart, it's going to be reaching back a bit further. The one slightly bullish advantage that we see here is this dip area is not nearly as deep as this dip area. The problem is you have this one in between, which was less than. So now it's dipping lower than its most recent, but is not dipping as low as like its most catastrophic drops, which you see like here and here. So slight bullish crossover, but that MACD is curling back toward the signal line at the moment. Once again, then indicating that it could turn bearish and have a bearish crossover to the downside again. So, I mean, I'm not going to say anything shocking here, but this is not looking great on the macro chart. The most important thing, in my opinion, is to back up the video, watch for that down channel, that consolidation channel to get broken out of on the upside by establishing on those price targets that we saw at like 21 and at like 24, 25, whatever it was. And those price targets that we set in yellow, I think are really, really what you're going to want to look for if you're playing this at a macro level. Let's switch over to the micro. We'll go 5 days. And so here we see obviously just like more downward activity. It tried to make a little push up today, which was admirable, but it kind of got caught here again, which is where it got caught. Right in this area. It started to bump its head underneath and got stuck there, and then sold off and pushed down in recent days. If you are looking for a stop loss in the near future, in my opinion, if it gets caught underneath this 1896 and can't sort of immediately recover back off of there, that would be a pretty bad sign, falling below most recent lows. And, kind of not surprising that it caught itself where it did late in the day today, because it caught itself there at this point here, and then had a few stutters when it was coming down to this 1895, 1896 level yesterday, and it always had some stickiness in that area as well. So that 1915, we could hope for some really, really solid support to be kind of shown through there. The next one, 1960, because this is a tighter time frame, these price zones and price targets are just organically going to be closer together. But these are the sort of like stepping stones that I would look for it to build on. And if we just stay within the 5-day frame here, it could have some really good run room. I actually don't think this area, this 2075, say, will be as sticky as this 21 is what I would look for on that side. And then, if in the next few days we get up there, that literal, like getting through that this $21 level is probably going to be quite sticky at several points along the way. So look for opportunities there to sort of like trim or take profit if that's a thing that folks still have an opportunity to do. But then you sort of see where we get ourselves to 22 at that point. But again, no real like clean channels to speak of here, no real clean up or down trends even to play off of. At this point, it's sort of like, how my channel started as far as the stock videos goes, which is sheerly looking at and trading the supply and demand zones as they sort of like came about in the historical time frames. All right, let's chop these off. Let's take a look at the MAs. So curling down, bearish crossover here, as you would imagine from this big sell-off today. So it's basically kind of like bobbing and weaving. So you could see it sort of like continue to do that. You see sort of like one of those bunching formations that we talked about on the 2 hour. The same thing stands for this time frame. For any of these time frames, that like bunching and unwinding pattern, the methodology is the same. So here you saw all of these MAs bunch up, and then when they started to get distance from each other, get space in between each other, it was all in a downward pattern. And so that would have been a pretty good signal to either like don't jump in right now, or jump out of your position, or you have to decide what it means for you and your goals and your risk tolerance level at any given point. But that should have been an indication to you regardless that, hey, this is about to head down. And then it basically had to come down, catch itself, and then they bunched up again, right? And then it started to unwind, coiled back up again, and then unwound. And then here we're getting a bunch of separation. The MA is in a bullish pattern, so that could give you an opportunity to jump in if you wanted. And then you see the bearish crossover start there on the 12 to the 20. And then it's just continued down for the rest of the day. And now all of the MAs have crossed below the 180, so that's not a great sign. There was really good buying volume, as you can see with this volume bar here as at opening bell today. And then there's relative to the midday, buying volume coming in here toward the end of the day. I don't know how sort of like skittish the market is in general at the moment since I'm making the video. But we're about mid-range on the RSI. So this RSI is, at least playing out a little bit better than what we saw on the 2 hour. But still sort of like situations like this where, when this was oversold and the price is at 1950, and then over here, it's overbought and the price is at 1945. So it's like these aren't good signs when the oversold price that is higher than the next overbought price. Those are bad signs, as you can imagine. But we'll see how this one plays out. So this is the next one I would watch. It was overbought at $20.07, became oversold finally at $19.13. And so that at least follows a logical progression of price to RSI. And now we'll see if it does scoot itself through this mid-range and into overbought, and especially if that can reach over the 2007, 2008 level, then that could be the first sign of a reversal, which would be great for the bulls. MACD, we do have a bullish crossover here toward the end. Like it had said, we see some buying pressure coming in. It's not super high volume like you see down here. Definitely not as much as we saw in the at market open, but that's pretty consistent as you see back here. So it's about the same buying volume that we saw yesterday if we look at sort of lining up the height of the bars from this area to this area. But anyway, back to the MACD. So we do see the bearish momentum dying down here, right? Relatively big red, really big red, and then it dwindled and dwindled and dwindled, and then we got a little bit of a bullish presence, and then the bears tried to get some momentum again, but it was pretty quickly quelled. And now we have an at least on par bullish effort in play right now. We see that it's getting pushed down. These wicks on the upper side mean that the price is trying to get stretched up there, but it's being sold off. So it's having a hard time breaking through right now this 1936 level. But the MACD could be showing that there's some bullish momentum coming into the market. But we'll have to see how this area in the histogram plays out. All right, folks, there you go. That is CCIV. You know, I know that it's been a tough one for a lot of folks, but I certainly wish you good luck, at least as you try to like wrap your head around where it is, where it might be going, what you do if you bought in when it was much, much higher, you know, what you do if you're looking for just some volatile tickers to kind of play and get some price action off of. We will see, you know, but hopefully this provided some ideas, some things to look at that could help you out. Well, no matter what you're trading, I wish you the best of luck. And again, please check out that What to Trade When the Stock Market is Crashing video. That can help you on any red days. It doesn't literally have to be a stock market crash. Just anytime the market turns red or there's bearish sentiment across the market, even if it's just for a day, that video should help you have some idea of how to either reduce your losses during those days or even make some profits. All right, well, thanks once for watching. I really appreciate it, and I will see you in the next video.